Thinking about buying your first home but feeling overwhelmed? Don't worry, I got you covered. In today's video, we're going to break down the 10 essential steps to buying a home. I'm going to share some insider secrets and help you dodge some costly mistakes that could save you thousands of dollars. Now let's make your home buying dream a reality and jump into today's video. Step one is planning your finances. Now you're going to need 3 buckets of money. You're going to need money for down payment, money for closing costs, and an emergency fund. Now a down payment is the upfront money you'll pay towards the purchase of a home. This is typically expressed as a percentage of the total price. The rest is financed through a mortgage. For example, if you're getting FHA financing, FHA requires a minimum down payment of 3.5%. So if you're buying a home for $300,000, you would need $10,500 for a down payment. What if you don't have enough money saved up for a down payment? Now, there are loan programs out there that offer down payment assistance. For example, in Nebraska, we have a program called NIFA. NIFA stands for Nebraska Investment Finance Authority. NIFA has a program where you can finance the down payment over a 10-year period at a 1% interest rate. Now, if you want to learn more about NIFA, I'll leave a link in the description below. The next bucket of money is going to be closing costs. Now, closing costs are fees and expenses beyond the down payment that buyers pay to finalize a home purchase. Example of closing costs are appraisal fee, loan origination fee, home inspection fee, title insurance, homeowner's insurance, prepaid property taxes, escrow fees, and recording fees. These costs typically run from 2 to 5% of the purchase price of the home. For our example, let's use 3%. So if you're looking at a $300,000 purchase price, you would need about $9,000 for closing costs. Let's say at the moment you don't have enough money saved up for closing costs. When you write an offer, you can ask the seller to pay for some of your closing costs. Now, the good news about the current market, as the market cools, more sellers are open to paying some of the buyer's closing costs. You're also going to need some sort of emergency fund. Ideally, you should have 3 to 6 months of living expenses saved for emergencies. Now, I know this is a tall order, especially in today's world, but if you have to have some money saved up for just in case. Typically, you want to determine your budget. Now, there's a rule out there called the Rule of 28. This rule states that no more than 28% of your gross monthly income should go towards housing. Now, let's say you had a household income of $120,000 a year. You would take $120,000, divide that by 12, which would give you $10,000 a month. This is your gross monthly income. You would take $10,000 and then multiply by 0.28, which equals $2,800. This means your monthly payment of principal, interest, taxes, and insurance, or sometimes known as PITI, should not exceed $2,800 a month. Now let's go to step 2, hire a realtor. Now, where can you find a good realtor? You want to find your agent long before you start looking at homes online. Where can you find a good agent? Ask your friends, family, or coworkers for a referral. You want to interview at least 3 local realtors. And you're looking for local experience and expertise. You want somebody that you can trust, and you're looking for someone that's a good personality fit. Now, you want to vet your agent online. Well, how can you do that? Well, you can look at their reviews on Zillow. You can Google the name of the agent. And you want to start asking questions. Now, what questions should you ask? Well, one of the questions you should ask is, how long have you been working as a real estate agent? You want experience. This is a business decision. Are you a full-time or a part-time agent? You want a full-time agent. This is not the time to hire your Aunt Sally who does real estate part-time as a side hustle. Are you familiar with the areas I'm interested in? And you want to ask about their commission policy. Now, the way you buy a home has changed. As of August 17th, 2024, before an agent can show you a home, you are required to sign a buyer-broker agreement. This agreement is going to stipulate how the agent will be compensated, the duties of the agent, and the buyer's obligations. And you want to ask for this agreement before you interview the agent, because you want to take the time to read the agreement. And then you want to ask, how long is the agreement? Now, the length of a contract is negotiable. You want to avoid being locked into a long agreement? And what do they charge? And remember, commissions or compensation is 100% negotiable. There is no such thing as a standard commission. And then you want to ask, what if I'm not satisfied with your services? Well, what about Zillow? Can I just call the agent we found on Zillow? Sure, but you still got to vet that agent. Many people don't know that agents pay thousands of dollars to advertise on Zillow. Many times what happens is you'll have one agent pay for the advertising, and then what they'll do is they'll distribute those calls from Zillow to new agents on their team. And that means you might end up working with a brand new agent. So you just want to utilize some caution. And you want to be wary of signing something online. The last thing you want to do is to be locked into a long-term buyer-broker agreement with an agent you're unhappy with. Let's talk about step 3, getting pre-approved. Now, the next step in the process is to get pre-approved with a local reputable lender. Not all lenders are created equal. The lender is going to look at 3 things. They're going to look at your credit, your assets, and your income. The lender will need the following. They're going to need a proof of income. They're going to see your recent pay stubs, usually covering the last 30 days. They're going to need W-2 forms for the last 2 years. And they're going to need any additional documentation, bonuses, alimony, child support, or rental income. Number 2 is proof of employment. They're going to need the employer contact information for verification, and they're going to ask for recent tax returns. And then they're going to ask for proof of assets, bank statements, checking and savings accounts for the last 2 to 3 months, and any investment account statements, such as stocks, 401ks, or IRA accounts. And then they're going to look at your credit information. They're going to have authorization to pull your credit report. And they're going to look at your debt information. They're going to look at your documentation of recurring debts and your monthly payment amounts and remaining balances. They're going to need identification. So typically what they're asking for is a government-issued photo ID, typically a driver's license. And they're also going to need your social security numbers for credit checks. The lender is also going to ask for down payment verification, proof of funds for the down payment, and any other additional documents they're going to need, like maybe there's a divorce decree for alimony or child support, or a bankruptcy discharge papers, if that's applicable. And they're going to need any rental agreements if using rental income is used for qualifying for a mortgage. Providing accurate and complete documentation up front ensures a smoother pre-approval process. Now, you can interview several lenders. The lender will pull your credit. However, if you interview several lenders within a 30-day window, it will only count against you as one credit pull. So don't be afraid to talk to multiple lenders. Depending on your financial situation, you will be approved for an FHA, VA, USDA, or conventional financing. FHA financing stands for Federal Housing Administration. FHA is designed to help buyers with lower credit scores or smaller down payments qualify for a loan. It offers more lenient qualification requirements and typically requires a down payment of 3.5% down. VA financing is a loan backed by the U.S. Department of Veteran Affairs. This loan program is for veterans and requires no down payment and no mortgage insurance. Conventional financing is not insured or guaranteed by a government agency like FHA or VA. These loans often require higher credit scores and larger down payments, but offer more flexibility in terms and conditions. USDA financing is for rural areas and is a government loan program backed by the U.S. Department of Agriculture. It offers benefits of no down payment and is only eligible for homes in qualified rural communities. And one word of caution, be careful. A lender is not a financial advisor. Just because a lender pre-approves you for a $400,000 mortgage doesn't mean you should buy a $400,000 home. Make sure you're comfortable with the payment. Many buyers are not aware that even in the world we live in today, even if you have a 30-year fixed rate mortgage, your mortgage payment can still increase. Your monthly payment consists of PITI, principal, interest, taxes, and insurance. And in some cases, depending upon your loan and your down payment, you'll have mortgage insurance on top of that. Now, when you get a mortgage, your principal and interest payment is fixed for the life of the loan, but your taxes and your insurance will increase as time goes by. Make sure you leave room in your budget for those increases. Now let's go to step 4, house hunting. The next step in the process is house hunting. As we stated earlier, before you tour a home with an agent, you'll need to sign a buyer-broker agreement. Now, when you start the house hunting process, make a list of your must versus wants. Keep in mind, the perfect home does not exist. You should grade every home you see on a scale of 1 to 10, 10 being the best. The perfect 10 is probably out of your price range. What you're looking for is at least an 8 out of 10. An 8 out of 10 is 80%. That means the home meets 80% of your needs. 10% can be changed and 10% you can live with. Now, you're going to need to see homes in person, and good homes go quickly. You want to look at homes when they first hit the market, and you want to look past things like decorating and the paint. The first thing you're purchasing is the location. You want to view the home in the eyes of a seller. Look at how difficult it will be to sell the home in the future. For example, maybe you're fine with buying a home on a busy street, but when you go to sell, that's going to come back to haunt you. Now, I live in Omaha, Nebraska. People in Omaha make real estate decisions based on school district. Even if you don't have kids, it can make a difference when you look at the value of your home. For example, every school district in Nebraska has 4 classifications: excellent, great, good, and needs support to improve. Part of the location is the school district, so make sure you evaluate the schools. And if you want to learn more, you can explore nep.education.ne.gov. You want to also research things like crime rates. Now, one site that can assist you is neighborhoodscout.com. And don't forget to check the state's sex offender registry. In Nebraska, you can search by location at www.sor.nebraska.gov. Once you find a home that meets your needs, it's time to make an offer. Let's look at the next step, which is step 5, making an offer. Once you find a home, it's important to move quickly. Good homes that are priced right move quickly. Some buyers want to sleep on it, and there's a saying that goes like this: if you sleep on it, you might not sleep in it. What should you offer? Now, that's the million-dollar question. That's up to you. Your agent can't tell you what to make for your offer. The agent can provide you with some data for the area, but the offer price is going to be up to you. Before you sign the contract, make sure you read the contract. When you submit that offer, you're also going to submit an earnest deposit. Now, what is an earnest deposit? An earnest deposit is a check written by the buyer to show the seller of your intent to purchase. The amount is negotiable. Typically, on a $300,000 home, you'll see an earnest deposit of 1% of the purchase price. The earnest deposit is held by the title company in escrow and will be credited to the buyer at closing. Now, when you write an offer, the seller has 3 options. They can accept your offer, they can reject your offer, or they can counter your offer. If they accept your offer, congratulations. You have a legally binding contract and you can move on to step 6. But if they reject your offer, you can submit another offer or you can move on to a different property. But if they counter your offer, then you have 3 options. You can accept the offer, you can counter that offer, or you can reject that offer and move on to a different property. Before we go to the next step, how do buyer agents get paid? Now, when the contract is written, the buyer's agent can ask the seller to pay for the buyer's agent compensation. Again, commissions or compensation is negotiable. Now let's move on to the next step, which is step 6, due diligence. Now, the next step is the due diligence period. For example, according to our purchase agreement, if the buyer elects to conduct inspections, the buyer has a 14 calendar day window to conduct any and all inspections. This can include a whole house inspection, a sewer scope inspection, a radon test, a mold test, structural engineer inspection, or any inspection or test the buyer deems necessary. Now, if you get cold feet, the time to bail is during this 14-day inspection window. When you conduct inspections, the inspection is paid by the buyer at the time of the inspection. Once the contract is accepted, order your inspections right away. For example, if you're purchasing an older home in a neighborhood with mature trees, you may want to do the sewer scope inspection first. Then, if the sewer scope inspection checks out, then you can do the whole house inspection. In the Omaha area, eastern Nebraska is known for some of the highest levels of radon in the country. Now, what is radon? Radon is a colorless, odorless, radioactive gas that occurs naturally from the breakdown of uranium in the soil and can accumulate to harmful levels inside homes. Radon is the second leading cause of lung cancer behind smoking. If radon is found, the buyer can ask the seller to install a radon mitigation system. Now, once all the inspections have been performed, the buyer has three options. They can accept the home as is, they can ask the seller to make repairs, or the buyer can bail. If the buyer asks for repairs, the seller can either make the repairs or release the buyer from the contract. Again, this is all a negotiation. During the escrow period, which typically is around 30 days, the title company will conduct a title search and the lender will work closely with the buyer for final loan approval. Part of final loan approval, the lender is going to require the buyer to obtain a homeowner's insurance policy. Now, it's important to understand your policy. You're looking for the best policy at the best rate. In Nebraska, our homeowners insurance rates are higher than average. One thing to pay attention to is the age of the roof. An older roof may be uninsurable, or the buyer may not be able to obtain full replacement coverage. At this time, during this escrow period, the buyer is also going to contact the utility companies to transfer utilities into the buyer's names before closing. The lender is also going to require an appraisal. Step 7 is the appraisal process. An appraisal is an opinion of value. Depending on the amount of down payment and the type of financing, the lender may require an appraisal. The lender will have you pay for the appraisal up front. The lender wants to protect their investment. The lender does not want to loan you $300,000 if the home is not worth $300,000. If you're getting government financing like FHA or VA, the home must appraise for purchase price or higher. Also, when you're obtaining government financing, the home must be safe, secure, and sound, meaning the lender may require certain repairs to be done before closing. For example, if there's a stairwell with a missing handrail, the lender may require the handrail to be installed before closing. Once the appraisal is complete, we're on to the next step, which is the final walkthrough. Step 8 is the final walkthrough. The final walkthrough is usually done 24 to 48 hours before closing. The final walkthrough gives the buyer one last opportunity to inspect the property to ensure it is in the agreed upon condition and that any negotiated repairs have been completed. Now, the key goals on the final walkthrough: you want to confirm the condition, verify the property is in the same condition as when the offer was made. You want to check repairs, ensure that any repairs agreed upon during negotiations have been properly completed. You want to verify fixtures and appliances, confirm that all items included in the sale are present and functional. And 4, you want to ensure that there's no new damage. Look for new damage that might have occurred since the last inspection. And you want to confirm cleanliness. Check that the property has been vacated, left clean, unless otherwise agreed. Now, it's not going to be perfect, and we're talking about broom clean. Things to bring during the final walkthrough: you want to bring the contract, the inspection report, a checklist, and your phone or camera to take notes. After the final walkthrough, we're at the next step, which is closing. Step 10 is closing. Closing day is the final step in the home buying process. This is when ownership of the property is officially transferred from the seller to the buyer. On this day, all remaining documents are signed, money is transferred, and the buyer receives keys to their new home. Now, to prepare for closing day, you want to review the closing disclosure. The buyer will receive this document a few days before closing. It outlines all the costs and payments associated with the purchase. On closing, you want to bring identification. A current government-issued photo ID is required. And then finally, you want to bring the required funds. You want to ensure that funds are in the form of a certified check or a wire transfer. Personal checks are not accepted. Key activities on closing day. Closing will typically take about an hour and will usually take place at the title company. You're going to sign the final documents. The buyer will sign a series of legal documents, including the deed, mortgage agreement, and the settlement statement. The buyers will also sign loan documents if they're financing the purchase. 2, they're going to have the payment of the closing costs. The buyer pays any remaining down payment and closing costs via cashier's check or wire transfer. And this wiring the funds. Never take wire instructions via email. There's all sorts of fraud that's taking place. You want to make sure that you verify those wiring instructions. And then the third thing that's going to happen is a title transfer. The title company ensures that the property is free and clear of all liens. The deed is transferred to the buyer and will be officially recorded with the local government. The fourth thing, you're going to have funds distribution. The seller receives the proceeds from the sale. The real estate agents receive their compensation, and all other fees are paid to the relevant parties. And then finally, you have key exchange. Once all documents are signed, the buyer will receive keys to their new home. After closing day, the buyer should verify that the deed has been recorded. They should keep all closing documents for future reference because they're going to need those for their taxes. And they're going to want to change the locks. And then congratulations, you just officially purchased your first home.